Here's what's coming up on the program today. Nigeria's President Muhammadu Buhari launches the 650,000 barrels per day Dangote Refinery today in Lagos, Nigeria. And Tanzania pushes for gas-powered vehicles to save costs. And Egypt's exports to the United States fall to $2.3 billion in 2022. Hello and welcome to Business Incorporated, the first edition for the week. I'm Will Ibang. Let's get started. We begin, as always, with market numbers in Africa, where major equities were trading mostly in positive territory at intraday. Nigeria's NGX was up, though marginally, by 0.01% to settle at 52,190 points. We see South Africa, however, on the flip side, down about 0.25% to 98.52%. Now, up north in Egypt, EGX rose by 0.66% at intraday, while Kenya closed Friday's session in the green. But we're going to circle back and see how the intraday will dig deeper into what's happening at the Nigerian exchange with Elvis Otunta, Managing Director, Northern Burgess Securities Limited. Good afternoon, Elvis. It's good to have you on the program.
Yeah, hi, Will. Good afternoon, and thanks for having me.
We're just going to, we see the NGX down. So earlier, it was down about 0.07% between 11 and 11:30. Now, we're seeing it marginally in positive territory. What's driving this at the NGX at the moment?
Okay, fantastic. Yes, so just like you rightly observed, so we've had the last 2 weeks of a bearish run in the market, and then we equally saw some large volumes transactions on some key blue chip stocks, like especially in the banking sector. So you've had the likes of heavy purchases taking place with the likes of GT, Zenith, and this you can see easily reflect on its share price. However, the dip we saw in the market earlier in the day was as a result of some profit taking already happening, and you can only imagine, right, where is GT currently 27 mark. This we haven't seen in almost 6 months. We haven't seen GT trade at that level. Today it's crossed 27 naira. So it's only what just was natural for investors who had entered into this market at taking position in such a stock at say 22 naira or even slightly below to want to take profit. So you're seeing profit taking happening. However, the activities of the institutionals and PFAs and the likes, right, in these stocks is still sustaining the price from dipping below where it would have, just to cushion the effect of the profit taking happening already.
So what do you think is driving this move for GTCO? What do you think is driving this move? Is it the earnings report that's expecting? What do you think investors are seeing while they are in the stock?
Okay, yes. So traditionally, in recent history, the likes of GTCO, Zenith have proven to consistently pay better than expected dividends. Okay, and the yield on those dividends is one major attraction for investors currently. So where we see an environment now where interest rates keep going up, your interest, or rather your inflation rates keep high, spiking up, investors look to the equities market, right, for stocks that could give you returns that could help hedge against inflation or cushion the effect, right? So GTCO, Zenith, the likes of Access Bank, these in the banking sector, these are stocks that have been of major attraction to investors because the returns on their dividend is enough, at least to some extent, helps to cushion the effect of inflation. So that is one major attraction why there is a rally in the stocks of GTCO and its peers.
Well, the reason I suppose why we're seeing investors flock to the equities markets because we're not seeing a corresponding increase in terms of yields in the fixed income space when it comes to increase in key interest rates by the CBN and MPC. They're meeting tomorrow and Wednesday. Elvis, what do you think the CBN is going to do? What position do you think the CBN is going to take?
Okay, yeah. So with us having a record increase in inflation rate, right, to about 22.2%. It's expected that there's going to be a corresponding, hike in NPR. So I foresee another increase, right, in NPR by the MPC tomorrow. So I project a 50 basis point increase. However, this isn't something I think is sustainable. We can't continue to, increase this rate because it has its trickle effect down the line on how the economy as a whole, blending rates, what's the impact on lending rate, and a whole host of others. Even the government, how easily can the government sustain, this rate? So yes, it's going to happen because the CBN would have to react to the increasing inflation rate, but I don't see this being sustained for too long, and this in itself hasn't really helped the money market space because we're not seeing naturally when NPR goes up, it's only expected that every other instrument in the fixed income space also takes a cue and goes. But in recent times, we've seen that hasn't necessarily been the case. Okay, and so investors are beginning to wonder, you know what? Am I not still better off taking positions in some, key stocks in the equities market and, making in the equities market of a rally of a stock, making is 10% maximum rise. You could easily just make returns that the money market wouldn't give to you. So this is part of the consideration investors are having why you're seeing this attraction.
Definitely. We do not know how much of the inflation the market has already priced in, but we'll keep an eye out on what the CBN will do tomorrow and Wednesday, the decision they're going to take.
Yes,
Thank you so
definitely.
much, Elvis Otunta, Managing Director, Norimberger Securities Limited, for sharing your insights on the program.
Thank you, Will. Thanks for your time. Yeah. Bye.
Now let's make a move now to the Middle East, where stocks were trading mixed at intraday. The Abu Dhabi index was up 0.55%. Dubai was also up 0.18%. And elsewhere, still within the region, we see Saudi Arabia down 0.03%, with the Qatari index also down 0.08%. Now we'll flip over to the EU, where foreign ministers are meeting to discuss new sanctions against Russia. An agreement by the bloc would lead to the 11th round of sanctions from Brussels. DW's Chipanda Chimbelu joins us to tell us more. Chimbelu, what sanctions are being discussed today?
Well, the EU is looking at how to crack down on sanctions evasion from countries outside the bloc. So we're talking about places like Kazakhstan, Armenia, and the United Arab Emirates. So they are examples of transit countries for goods heading to and from Russia. So the bloc will also be discussing potentially a ban on Russian diamonds. Now, that's something that came up during the latest G7 Group of Nations summit in Hiroshima, Japan, last weekend. While the UK announced a ban on Russian diamonds, the EU said it would be potentially adding them to its sanctions list. Of course, any future sanctions here in the EU need the approval of all 27 member states, and that is something that makes the process more complicated, which is why we frequently see other countries like the US and the UK slap sanctions much faster than the EU.
Now, Russia is the most sanctioned country in the world right now. Are the sanctions even working?
Well, we know that Russia is feeling some economic pain, but it's not as extensive as the sanctions target because Moscow is managing to circumvent the sanctions. Let's take diamonds, for instance. Russia sells the vast majority of its diamonds to India. And then, of course, it's hard to determine the origin of the diamonds once they leave Russia. And the same applies to Russian oil. Refined Russian oil is reportedly making its way to Europe via India. And then, of course, there's also some types of Russian wood which are coming to the EU via China. Now, targeting countries like India and China with sanctions will prove very difficult for the EU because of their sizes or would prove rather very difficult for the EU because of their sizes and trade volumes. So the bloc is really looking at how to possibly sanction companies, even when they are delivering or buying goods from Russia that are coming through a transit country.
Away from all the war, what can we expect from the markets today?
Now, here in Europe, the eyes are going to be on Greece, where the country's Prime Minister Kyriakos Mitsotakis won the vote in the national election on Sunday. And while his party fell short of the threshold needed to form a government, his party came out ahead of the opposition. So that's a signal that he will likely carry on as Prime Minister with investment-friendly policies. And the markets will also be watching discussions later in the day on the U.S. debt ceiling. President Biden is set to meet with House Speaker Kevin McCarthy. Of course, time is running out for them to come to an agreement, and we all know what a U.S. default would mean for markets. It's just going to be more volatility if they do default.
Thanks so much, Ponda Chimbelu, DW expert, for your thoughts on the program. Now, in the UK, the government has cut its stake in NatWest Bank, which is it's bought in the financial crisis. Juliana Olainka is in London with the details on that and more. Juliana, good afternoon. What informed that decision by UK government?
Yeah, good afternoon, Will. Well, this has been part of the buyout plan in the beginning. So you quite rightly by saying that it was in the 2008 financial crisis that the British government stepped in to bail out what was then called the Royal Bank of Scotland, which is now NatWest. And I believe at its height, they owned about 84% of the bank. And increasingly, we are seeing that NatWest are buying back their shares. And they've done so again today. So I believe they bought back about 469 million shares from the government, or should we say the UK taxpayer, to the tune of about £1.25 billion. That brought down the government's share of the bank by 3%. So they now own about 38% of the bank. And NatWest are really proud of this. I think their CEO has been speaking this morning, and they said, look, this was all part of our strategy about prioritising coming back into full ownership. And we're very thankful for what the British government have been doing. At the moment, if you are a bank who is based in the UK, your profitability is going through the roof because it costs so much to borrow at the moment. We've got interest rates at 4.5%. They could peak at 5%. So things are going very, very well for NatWest. In fact, in the first 3 months of the year, I think their profits came in well over £2.8 billion. So yes, this was all part of the strategy anyway to slowly start giving NatWest back control of their bank and put in money in the coffers of the Treasury, which of course is very much needed at the moment.
They're very much needed, Juliana. That's a good development to see there. But we are also seeing a month-on-month jump in the average asking price for houses. What's behind that?
Well, it depends on who you ask, actually, Will, because, the data does distort sometimes. So in one area, they say there are issues with the property market. And then we've got this data from Rightmove this morning showing that month on month, they're seeing the asking price for a first-time home increasing by about 1.8% month on month in this country. That's the equivalent to about £7,000, which is about 5 million naira, I think, depending on, which market you look at. But according to Rightmove, so they basically showcase about 98% of properties that are for sale or for rent in this country. They say it's because there has actually been some stability in the market. Now, again, the reason why I say data can distort, because if you speak to people who are struggling to pay their mortgage at the moment, they say that is not the case, that there isn't stability because interest rates keep on ducking and diving. But if we go back to October or September last year when Liz Truss was in government, that really caused a stir, her Trussonomics budget, which spooked markets. So since that time, they say things have stabilised, which is good for buyers. And also the fact that some of the scary headlines we were having from the Bank of England and from the IMF at the beginning of the year about us going into recession, we haven't. So perhaps consumer confidence is starting to creep back. But if you actually look at that figure, the average price of a UK home is about now £327,000. Again, I don't know how much that is. That is probably about 300 million naira. It's just a lot of money. And you'll have to double that if you want to live in London, which is why, although we have had this data from Rightmove, we are getting lots of reports in the media at the moment, particularly from the Mayor of London, Sadiq Khan, saying that, you know, it's just completely unaffordable. You're paying £2,500 a month to live and rent in London, and if you want to buy a home, you've got to have at least £500,000 in your bank, which nobody, well, unless you're very lucky, has in their account. So yeah, flip-flopping data from the housing market today, but according to Rightmove, house prices are increasing, which is not good news for everyone.
It's definitely not good news in this trying economic times when people are trying to save money and food costs is rising every day, energy costs is rising every day. We don't need added headache with housing at the moment, Juliana. We don't need that. So how's market faring at intraday? Is it doing any better?
Here to everything you said. So let's have a look at the intraday numbers. The FTSE All Shares actually doing good. First day of the week, it's up by 0.18%. The FTSE 100 up by 0.26%, and the FTSE 250 also trading higher at 0.06% at intraday. In the currencies market, the British pound is currently trading down against the US dollar by 0.06%. It's had a massive rally over the past couple of weeks, and that's surprised in there. The British pound is also trading down on the euro by 0.02%. But at intraday, the British pound is trading up on the Japanese yen by 0.10%. Well,
thanks so much, Juliana. So now we're going to be looking at the Dangote Refinery, Juliana. It's going on right now, and we'll keep you abreast. I'm sure you're keeping track of what's happening here in Nigeria. You know, it's big,
I'm
huge.
tuning in, watching channels live.
Thanks so much, Juliana, for your updates.
Big.
Thanks. Now, as its 650,000 barrels per day capacity, Dangote Refinery comes on board, both the public and private sectors are counting the benefits to the economy. The central bank governor, Godwin Emefiele, who was present at the event, believes that the facility will reduce the 40% forex expenditure on importation petroleum products. Let's take a listen.
In 2014, we conducted some studies and we said, what percentage of what percentage of FX does importation petroleum products consume in our reserves? 30% of what we spend on importing goods and services into Nigeria is spent on importation of petroleum products in 2014. And we have continued to track this, and the numbers have not changed. By 2022, our data shows that between foreign exchange from NNPC and also from Central Bank, that we spend in importing, it was put at almost close to about $25 billion in 1 year. That is what we would save by virtue of the fact that we will no longer have to dip our hands into our reserves for up to $25 billion to import petroleum products into Nigeria. That is a good thing. You may doubt the figure, you may say the figure is large, but let's not forget again, we've always talked about petroleum products in Nigeria flows to other neighboring countries and the rest of them. But this is the actual number. And for us, it is a very serious savings for the reserve. It stops the hemorrhage. It stops the bleeding exchange reserve. And I know very well through this backward integration, through this import substitution, and which will Lead to export orientation, I think Nigeria has good story to tell the world.
That was the Central Bank Governor Godwin Emefiele. Next, a look at low-carbon hydrogen energy plans in Nigeria. Stay tuned. This is Business Incorporated. Welcome back. Now, Africa, in particular Nigeria, is uniquely positioned to become a net export and trading hub of low-carbon hydrogen. But with hydrogen, can Nigeria retain its status as a global energy supplier? What with the several challenges and hurdles it has to surmount to realize this ambition? Chinandikwa, energy expert and vice chair African Energy Council, joins me to make this assessment. Good afternoon, Chinan. It's good to have you on the program.
Hi, Will. Good afternoon. It's a pleasure to be here.
So now Nigeria is an oil state. So why should it abandon its competitive and leading position in oil and gas for hydrogen, which we know is proven right now as a commodity? Also, don't forget that today the president is launching the 650,000 barrels per day Dangote Refinery in Lagos. So with that going on, who's going to be talking hydrogen?
You're 100% right. I think that's a good place to start, actually, around the refinery. This is a massive milestone for the Nigerian state, and I think one that every Nigerian should be immensely proud of and inspired by. I've got to say, this is the largest single train refinery in the world, 650,000 barrels capacity, refining capacity. It would supply much of the crude needs for Nigeria, 100%. And with a huge surplus, for export into other parts of Africa or even into Europe. So this is monumental, I've got to say. If you think about all of the issues we've had over the last couple of years, 4 refineries, all not working. We've done several turnarounds and investments into them. None of those have happened. Now we have someone who's come with one massive train that potentially can supply all of the petrol, diesel, and all of those needs. Chemical needs that we require in Nigeria and largely Africa in lots of ways. If you think about South Africa, their refining capacity has also diminished massively last couple of years. So this is really exciting. It's a very, very exciting prospect, I'd say, and we should all doff our hats for Aliko Dangote.
So can Nigeria really export hydrogen? And if so, what barriers need to be overcome to make this happen?
Yeah, so so a couple of things. That's one is I'll just go back to your other question, if that's okay. You asked why Nigeria why should it, being an oil state, think about hydrogen? I think there are 2 very valid reasons why Nigeria must think about hydrogen or think differently. The first of those is the markets that we are supplying as an oil state. So we produce crude oil, the markets we're supplying and selling to, those markets today are transforming. Those markets today are moving away from oil and gas. If you look at the transportation sector, if we take Europe as an example, Europe today has just come up with a mandate by 2035, no petrol, no diesel cars will be sold in Europe anymore. If you flip over into the UK, the story is exactly the same. By 2030, no new petrol or diesel cars will be sold. What that means ultimately is a huge chunk of your crude that goes into that market will not have where to go because all of those vehicles, the transportation sector has transformed, has gone electric. So that's one. That's one reason why Nigeria has to think about that. The risk to Nigeria is we might end up having stranding of our assets. Our oil and gas may become stranded, low in value, nobody wanting it. So that's question one. Number 2, if you think about it, most of the major investors in hydrogen today are actually our peers. They're actually the leaders in this bracket where we call ourselves. Saudi Arabia, number 1 oil producer in the world. UAE, number 6 or number 5, I think, oil producer in the world. And a variety of them. Kuwait, our pair. Qatar. I mean, many of these countries are massive oil producers themselves. But they are the ones who are taking a leading position in hydrogen. Now, why, you might ask, is exactly that. Everybody is thinking about hedging their bets. They produce oil and sell oil, yes, But the question here is if hydrogen as a commodity is going to have a place in 2030, 2040, 2050, how do you take advantage of that? So many of the countries like Nigeria are taking advantage of that, and they're hedging their bets and making big investments into hydrogen. So these are two reasons, I think, why Nigeria has to think about hydrogen as a commodity.
Chinan, we're clearly running out of time here. I believe we'll have to leave it off here today. But it was great having your perspective on the program. Thank you so much, Chinan Dikwo, Vice Chair, African Energy Council. African Energy Council. We do hope that Nigeria explores this hydrogen energy ecosystem properly. Thank you so much. So still on energy, Tanzanians have been advised to convert their petrol or diesel-fueled vehicles to natural gas so as to save costs and reduce carbon emissions. According to officials of the Tanzania Petroleum Development Corporation, natural gas is cheaper compared to petroleum products, and its use will significantly reduce operating costs for the modern public transport project. Now, in Egypt, the Central Agency for Public Mobilization and Statistics, CAPMAS, reports a decrease in the value of Egyptian exports to the U.S. in 2022. According to CAPMAS, the value of Egyptian exports to the U.S. amounted to $2.3 billion in 2022, representing 4.5% of Egypt's exports to the world. But when compared to $2.5 billion recorded in 2021, it's a decrease of 9.1%. Meanwhile, the value of Egyptian imports from the U.S. amounted to $6.8 billion in 2022, with grains, oily fruits, and medicinal plants ranking first. And that's it on Business Incorporated. Do stay with us tomorrow. Join us tomorrow for another edition. I'm Will Ibong. It's bye for now.